what do you see happening with gold in the future?
Gold is the ultimate fool's commodity. It has little appeal beyond mankind's ability or mankind's intention of buying it at a price for the explicit intention that when they end up selling it, it'll be at a higher price than what they bought it for. Other than that, unlike silver or any of the other precious metals as platinum, it has very little industrial usage. So the way I see it is that gold should serve as an insurance bet on your portfolio. So let's say you have 100 pence or 100 cents to spend. I would say spend about 10 or 15 cents on that, and the rest you hedge your bets accordingly.
Is there still a strong case for gold?
There's definitely a strong case for gold. There always is, provided you do it within reason, provided you don't overdo it, because let's remember that gold offers no yield. There is no income from gold. You keep it as a safety net. And a lot of people tend to opt for it even when the gold price is not firing up. We saw gold soar to $1,300 an ounce. It's now $1,260 or in that region. But that's not necessarily mean that people have lost their appetite for gold. We could hypothetically have Donald Trump in the White House. Might not happen, might happen. We have Brexit-related problems. We had global problems. We have geopolitical tension in the Middle East. So when people are kind of spooked, and if they're partially spooked or wholly spooked, they tend to turn towards gold as a safety bet, and I think that will never diminish.
Gold versus silver. Talk to us about the ratio.
I would say when I say that gold is the ultimate fool's commodity, in silver it's partially a fool's commodity because silver has industrial usage for instance in catalytic converters in automobiles and other industrial usage. Now silver, interestingly enough, gold has by all means appreciated for much of 2016 and is likely to, depending on what the US Federal Reserve says, gold is likely to respond accordingly. But silver has appreciated 39% in the year to date as we speak in October 2016. So the ratio is likely to stay where it is, but if I was a betting man, I'd play more on silver rather than gold.
So is there a ratio where gold increases in value first and then silver follows, or are the two not connected?
The two trail each other fairly closely, but the one differentiating factor is that there have been times where safe haven demand has fallen, people are less spooked. For instance, let's say hypothetically Hillary Clinton is in the White House. The level of people being worried would decline, and that will show on the gold price. With silver, if there is a drop, it's slightly tempered because it's a case of 50-50. It's 50% safe haven calls and 50% what is the industrial usage. For silver, the perfect storm is if industrial usage declines and safe havens gold decline, in which case silver becomes a very bad bet.
Is the ratio likely to hold the way that goes?
I think for the next 12 months, I think you would see some inversion in favor of gold. Beyond the next 12 months, you will have to interpret what kind of safe haven calls would be there. I would say the market is poised for a decision by the US Federal Reserve, and that's when you can make a considered call on where the ratio is going. But I would think it will be inverted in favor of gold.
If Armageddon arrives, which who knows, with gold and silver and everything else, will it all just collapse?
No, it's not, because even if you rewind the clock back to before the birth of Christ, the shiny metal has always had an attraction. A fool's commodity is called a fool's commodity because it has always been it transcends empires, civilizations, colonization, the whole rest of it. If all else fails, gold has been the medium to barter. So I don't think gold is in a spot of trouble, but of course if there is Armageddon, it has implications for silver.
Where is the demand for gold when everybody's potless?
It's the insurance demand. Even if people are desperate, they will still like something that they can piggyback on, something they can fall back on, and gold fulfills that purpose. I'm not saying that that's the best bet, but it's an insurance sense for a lot of people, and if they're down on their luck, it's also the last thing that they liquidate. So you would often find that if people are in trouble, they'll still keep hold of gold for that one particular day that they might need it.
Has the gold bubble, if there ever was one, has it burst?
Well, the last 10 years I've been asked the question a lot of times, and my answer is a simple one. there's always a bubble and almost always bears. So gold has had peaks and troughs, and this will continue. Right now, what's on the horizon? The US presidential election, how Brexit talks unfold, what the US Federal Reserve does, not just at its next meeting, but well into 2017, would color people's vision. Now, one thing that a lot of people are doing is that they're buying gold, but they're not necessarily keeping it at home. Because if you buy gold with physical traders, you can opt for a fee to store your gold with them. So a lot of people are taking positions in physical gold and opting to leave them with the vendors, so that when the time comes and they need to liquidate it or change their position, they can do it quickly.